It took almost a decade of fighting and wrangling with US regulators to get a Bitcoin ETF up and running. And finally, at the end of October, the ProShares Bitcoin Strategy ETF, ticker BITO, launched. And boy, was it a launch. It was the most successful ETF launch in the industry's history. We're a few days in and we're over $1 billion in assets under management. And it's generating so much interest and has so much momentum that a few days later, another Bitcoin ETF launched and more are on the way. So the real question is, assuming you want to have exposure to cryptocurrencies and Bitcoin specifically, is there a reason why you should be buying a Bitcoin ETF versus investing in Bitcoin directly? Let's talk about it. All right, 3 points I want to talk about today. Number one, this BITO ETF, the most successful ETF launch in the history of the industry. Definitely want to see what's in the ETF, what it tracks, and what it costs. Number two, let's talk about the pros and cons of investing in Bitcoin ETFs versus investing in Bitcoin directly. And number three, I want to give you a little bit of an overview of what's out there when you want to get exposure to Bitcoin, what other ETFs you can get to, what trusts or companies that effectively give you exposure to Bitcoin without owning Bitcoin directly, what's out there. So by the end of this video, you should have a pretty good overview and idea of the various products that really give you that exposure if you, for whatever reason, you don't want to own or you can't own Bitcoin directly. And we'll talk about all of these in the video. All the references to all the tickers and information is below the video, so definitely leave a comment. Have a question, something's unclear, we can talk about it in the comment section. So what's in the BITO ETF and how does it work? So let me just spend a couple of minutes kind of defining the terms here so that we're all on the same page. So this BITO ETF, just like any other ETF, it's an exchange-traded fund. It's a listed, approved by the regulators ETF that trades. You can buy it and sell it in your brokerage account. And the BITO ETF, this Bitcoin strategy ETF, gives you exposure to Bitcoin without you having to own Bitcoin itself. So far, very similar to any other ETF, right? Normally an ETF kind of holds a bunch of companies that gives you an exposure to high dividend companies or the solar energy companies or any other thematic kind of type of companies. So that's what ETFs do, right? You buy just one underlying that give you exposure to a mix of components that make up an ETF. Now, in the case of the BITO, it doesn't hold Bitcoin itself. What it does is it gives you exposure to Bitcoin through trading the futures contracts on Bitcoin. So the Bitcoin market has a futures market, right, which trades on the CME, on the Chicago Mercantile Exchange. And if you're not familiar with the futures market, let me just 30 seconds, kind of a quick lesson on what a futures contract is. A futures contract is an agreement that allows you to buy or sell in this case Bitcoin, at a future date at a predetermined price. So futures, for example, are heavily traded for gold or oil, right? When you buy oil, when you want to get exposure to oil, you typically do it through the futures market. You don't go and buy oil and get it physically delivered to your house, right? Nobody drives a tanker to your house and says, here's the oil, please take it and give me dollars. When you trade oil futures, you effectively buy your contract at a certain price. So let me give you an example. You buy an oil futures at $100 that will settle at the end of the month, right? These are monthly futures contracts. So you bought it at 100. Now we get to the end of the month and oil is trading at 110. So this is where oil is trading when the futures contract expires. Well, you bought it at 100. So whoever sold you the contract is obligated to make up the difference. So you financially settle the difference between 110 and 100. So you make $10. So that's how futures contracts work. It's the same thing for Bitcoin. You effectively get exposure to Bitcoin and see when the futures contract expires and settles, where Bitcoin is trading at that point in time, and you settle the difference. So this is what the BITO ETF does. And you can see it on the page here. I'm going to show you the page that kind of gives you the description of this ETF on the ProShares website. This is a ProShares ETF, right? So all of the fact sheet, the prospectus, everything is here. And if you look at the bottom of this first page here, you see the fund holdings information. You see that you have this CME Bitcoin futures contract. So you see two different contracts, the two different expirations as we kind of roll from one contract to the next with the passage of time, right? We settle the first one, or we sell out of the first one and we buy the next one. The last thing I'm going to say about this BITO ETF here is also the expense ratio. So it's important to know that when you're buying an ETF, you typically pay a fee to whoever is managing the ETF for you, because typically it's actively managed. People reallocate. In this case, they buy and sell these futures contracts. They do this actively. So here you spend 0.95%. So for every $10,000 that you would invest in this BITO ETF, you would be spending $95 annually in terms of fees. Let's talk about the pros and cons of buying BITO versus buying Bitcoin directly. So typically when people talk about the advantages of having a Bitcoin ETF versus buying Bitcoin directly, they talk about 4 reasons. Number one is transparency. Transparency is big for a lot of people, simply because they don't want to bother with this whole process of buying and selling coins and opening an account at a specific exchange like Gemini or Coinbase, just having a separate account from their traditional investing setup. And they want to have the transparency of the process. It's simple, it's easy, it's an ETF, right? The second reason that people put forward is the SEC approval process. This is a product, this is an ETF, it's exchange traded, it's been blessed by the SEC, by the regulators, and that gives people a lot of comfort. Think about Bernie Madoff and SEC failure there. So hopefully the SEC is doing better. This time they certainly took their sweet time to approve the first Bitcoin ETF, and there's a ton of applications in the process for other futures-based ETFs and spot-based ETFs. But certainly the whole SEC blessing is a big deal for a lot of people. The third reason that people put forward is they don't have to have a digital wallet. They don't have to mess with passwords, with keys, with hackers, with worrying that they will forget their password. They just don't have to worry about any of that stuff. They have it under one roof in their brokerage account, just simple, an ETF. Thank you, I have exposure to Bitcoin. So just simplicity, really. And the fourth reason that I've heard people mention very often is just a simple tax reporting and performance reporting under one roof, right? They have their investments at their broker. They want to have everything there. They don't want to bother with a multitude of accounts. They just want to have everything simple. It's all reported there. At the end of the year, they have their form that they submit to the IRS, and it's all done. Now let's talk about the cons, the drawbacks, the disadvantages of investing in Bitcoin ETFs versus buying directly Bitcoin. And there's really 2 major disadvantages here. The first one is the cost, right? Because this ETF, like all the other ETFs, they have a management fee. They have an expense ratio. In this case, is 0.95%. So for each $10,000 you would invest in BITO, you would pay $95 to ProShares for the fact that they manage this ETF for you. So if you're in it for a couple of weeks, just a quick appreciation, it doesn't matter, right? $95 on an annual basis, that's 26 cents every day. So ultimately, that's a small fee. But if you're going to be a long-term investor, it's really going to matter. And let me just give you a quick example of how this compounds over time. If you assume that you invest $100,000 in something, and that investment is going to produce a return of 4% a year, and you are paying 0.25% in terms of management fee, you're going to make $30,000 more over 20 years than somebody that has a management fee of 1%. So the only difference here is that somebody has a management fee of 0.25% versus 1%. That 75 basis points between the two translates, if you compound this over 20 years, into $30,000 on a $100,000 investment. So this is huge for long-term investors. People don't realize this, but if you hold something for 5, 10, 20 years and you're paying a 1% fee every year, this is a huge amount of money that you're leaving on the table. So the cost really is a big deal here when it comes to investing in Bitcoin ETFs. And we'll see this in a minute when we talk about all the other ETFs and how this is already being driven lower. All these, like, there's going to be a huge competition when it comes to the expense ratios and how much each of these providers for these Bitcoin ETFs is going to charge. Now, the second disadvantage of investing in a Bitcoin ETF like this one, which is giving you exposure to Bitcoin based on the futures market, is the futures market. It introduces a little bit of complexity for somebody that maybe doesn't understand the futures market well. It kind of introduces concepts like contango and backwardation, which simply is just the shape of the forward curve, whether contango is upward sloping, backwardation is downward sloping. So all of these concepts are slightly complex. We can talk about it in the comment section, or you can Google contango and backwardation. These are terms that are used in the futures market. This is very fluent language in that domain. But again, it's the slight complexity versus just buying Bitcoin, just buying the coin, which today you can do at many brokerages, right? Like interactive brokers like Robinhood and others are soon going to make this available as well. And it's just going to be a lot easier than investing in a Bitcoin ETF. All right, and finally at the third point of this video, where I really want to talk about all the other products that are out there, aside from BITO, that allow you to get exposure to Bitcoin without having to buy Bitcoin itself. So BITO, we talked about it at length. That was really the first approved ETF in the United States and started trading on the 19th of October 2021. Now, I'm mentioning this date specifically to underline the first mover advantage that they really have. So BITO started on the 19th of October. BTF, which is the Valkyrie Bitcoin Strategy ETF, started 3 days later. So only 3 days separated the launch of those two ETFs. But BITO at this point has $1.2 billion in assets under management, and BTF, the one that launched 3 days later, only has $45 million of assets under management. So you really see 3 days separated the launch of those two ETFs, but the first one has much more investments already within a few days, right? I'm filming this at the end of October, so only about a week elapsed since the launch of the first ETF. And here we are over $1 billion. Like I said, the most successful launch of any ETF in the history of the industry. So the first mover's advantage really is a big deal here. So aside from those two ETFs, so BITO and BTF, the gorilla in the room, right? The 100-pound gorilla here is really the Grayscale Bitcoin Trust, GBTC. So GBTC has for years been a great way to get exposure to Bitcoin. It has a 2% expense fee, so 2% you're giving up annually to Grayscale to manage this for you. But at this point, they're close to $40 billion in terms of assets under management. And they have already filed with the SEC an application to convert to a spot ETF. So they want to move away from that trust infrastructure or structure into a spot ETF, which again is going to hold Bitcoin itself. That's why it's spot ETF, right? So they will actually hold Bitcoin as opposed to the futures contracts like BITO. But Grayscale clearly has so far been the most dominant, but has also the highest expense ratio. So when it comes to the expense ratios, I talked about it earlier in the video. The next ETF I want to talk about is XBTF, which is by Van Eck. And this is an application that is pending approval by the SEC, and it's going to have an expense ratio of 65 basis points. So we already see the expenses and the expense ratios being driven lower. So we're at 2% for the Grayscale, 95 basis points for BITO and BTF. Now XBTF would be 65 basis points. So we already see that kind of war on the fees starting. And the last two tickers I want to give you, that's BTCW, which is a European listed Bitcoin ETF, which is a physical Bitcoin. So this one actually holds Bitcoin. Again, this is the lowest priced ETF in Europe, and it's 95 basis points as well. So that's BTCW. And the last one is BTCX, which is listed in Canada, also physical, so holds Bitcoin. BTCX has an expense ratio of 40 basis points. So we see a little bit of variability between the various ETFs. On average, they are still fairly expensive, right? Typically, ETFs are trading at much lower expense ratios, but this whole industry is new. These ETFs are being approved. There's a lot of pending applications that are with the SEC, and the more of these ETFs will be listed and start trading, the more these fees will be driven lower. So what to make of all of this? Should you be investing in an ETF, or should you just be buying Bitcoin directly if you want to have exposure to Bitcoin, right? For me, I think the two determinant criteria here is the simplicity and the investment horizon. For simplicity reasons, if you are in it just to catch a quick appreciation, there's been a big sell-off and you want to catch the next wave up and you want to be in it for a few weeks, maybe months, and it's simple, you have a brokerage account where you normally trade and you're not able to buy Bitcoin directly in your brokerage account, then the ETF makes absolutely sense. You know, it's very simple, simple to buy, simple to sell, no hassle. If your investment horizon is longer though, well, if you're going to hold it for a few years, these expense ratios, these fees that you would be paying away, although they seem comparatively small to the expected appreciation in Bitcoin that you hope for, well, eventually they will dent your returns. Paying away almost 1% per year, or 2% in the case of GBTC, ultimately compounds and dents your returns. So certainly for long-term investments, for people that don't want to trade it but they want to invest in it, I don't think the ETF is a great solution. I think you should find a way to hold a Bitcoin directly, open a brokerage account somewhere else where you can do it, or just go to Coinbase, go to Gemini, and just go through the hassle of opening another account and buy Bitcoin directly. That's just my 2 cents, or my 2 Bitcoins. Anyway, thanks for hanging out today. Leave a comment below. Make sure you give a like to the video, subscribe to the channel if you haven't yet, and I'll see you in the next video.